Okay, welcome back. All right, do me a favor, hit that like button, subscribe to the channel. So it's FOMC today, and if you've been following my channel, you know I do not trade on FOMC days. Why? Because the Fed could screw up your setups, and you could end up losing a lot of money very quickly. But also, now that's today, Wednesday, but also I have not traded at all this week. And the reason I have not traded, aside from the market seeming to wait on the Fed decision today, is we have a major world event going on right now that is affecting the market and can affect the market at any moment depending on what happens the next minute or the next second. And if you're on the wrong side of the direction the market is going because of what's going on in the Middle East, and really this is affecting the entire world, right? What's going on in the Middle East. Um, if you're on the wrong side of that, you're going to lose a lot of money very quickly. Okay, so I've decided, based on the short experience that I have day trading, I've decided to just stay the hell out of the market while we're here, while the world is in this uh, mess, I guess you could say it. Uh, and I think it makes sense to stay out because at any moment something can happen, and if you're on the wrong side, you're going to blow up your account. And from what I understand and the research I've done over the last couple days, um, retail trading has fallen off a cliff. And part of the reason for that, I'm going to guess, is the retail traders have been blowing up their account. If you're going into this, treating this market or any market as a casino, and you just have to click, 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 get in on a trade, get a trade working, that's not smart. And so I've stayed the hell out of this market. And I'm going to segue that into a very serious topic that I want to talk about, a very sad topic. It's a story from about 5 years ago. And, I explained to all of you, right, that there are no experts traders. There's no expert traders. All right. I don't care how long you've been trading. If you've been trading 25 years, 30 years, the market can humble anyone at any time. Just look at someone who is on the wrong side of oil the last, let me see if I can get it. Okay, if you were on the wrong side of oil, if you were short oil before this whole thing in between Israel and Iran started, you got beat up, and you got beat up pretty quickly. And it's likely your broker took you out before you did, right? As this is the light sweet crude futures chart right here. So if you were short, you got beat up. Let's go back to the S&P futures. So I'm staying out of this right now. The market can humble anyone at any time, but you can. Now that's expert traders. There is no such thing as an expert trader, right? Because an expert trader, what does that mean? It means you're right all the time. Nobody's right all the time trading, right? But I will say you can and you must be an expert on what you're doing and how your broker handles your account. Now, I did a video recently on margin, but specifically how your broker looks at your margin account. And I think it's very important that you watch that video, and I'll link to it in this video. It's important that you know and you understand how your broker handles your margin account. And I have one hell of a shocking and sad example that I'm going to show you. And some of you older people are going to remember this story, right? And but you younger people may not. It was written by this was Forbes. This was a Forbes story from June 17th, 2020. Now I had to black out some of the words here so that YouTube doesn't flag it. But the caption is 20-year-old Robinhood customer, let's say, deletes himself after seeing a $730,000 negative balance in his account. Now, let me just read this. And so here's how the story goes. The note found on his computer by his parents on June 12th, 2020 asked a simple question. How is a 20-year-old with no income able to get assigned almost $1 million worth of leverage? The tragic message was written by Alexander Kearns, a 20-year-old student at the University of Nebraska, home from college and living with his parents in Naperville, Illinois. Earlier that day, Kearns deleted himself, and Robinhood, which was his broker's platform that he was using, Robinhood's founders have since responded to Kearns' deletion, pledging major changes to their platform, especially around options trading. I'll continue. Like so many others, Kearns, now there should be a bunch of red flags right here, right away from you, but I'll continue reading. Like so many others, Kearns took up stock investing. Okay, I'm going to stop right there. This word investing, what this young kid, 20-year-old guy, was doing was not investing. I want to be very clear about that. What is investing in the stock market? Investing is investing in a prudent, long term plan of stock or mutual fund or ETF or bonds or a combination of all those in an account that you don't trade. You're you're young, you're in the accumulation phase of a portfolio, right? This is not investing what this young man did. What did he do? He was speculating. It's very different. Investing is you're putting money aside out of your pay each week or each month into a long term growth mutual fund or ETF, whose purpose is to provide you income, to grow and provide you income when you're no longer able or willing or wishing to work anymore so that you can live. It's a prudent investment. Okay, so Kearns took up stock investing, during the pandemic, signing up with millennial-focused brokerage firm Robinhood, which offers commission-free trading, a fun and easy-to-use mobile app, and even awards new customers free shares of stock. I'm going to stop right there. This idea of fun and easy-to-use mobile app. Yeah, there's plenty of newer brokerage firms out there like Webull and Interactive Brokers and Robinhood and many others, Ninja Trader or whatever. This isn't a game, and you're seeing already from this article, this is not a game, people. I'm trying by this channel to implore you to concentrate mostly on a long term investment plan, not a speculation plan. I've said it so many times. There's so many videos out there on YouTube and Discord and everywhere else on social media that shows, oh, I'm making all this money trading. It's the easy. I got this, great lifestyle. You have to be very skeptical of all of this stuff. All right, I'll continue. Robinhood added a record 3 million new accounts to its platform. As the COVID 19 stock market swung wildly, Kearns had begun experimenting, trading options. His final note, filled with anger toward Robinhood, says that he had no clue what he was doing. Boom. He had no clue what he was doing. He was risking money trading and speculating on options, and he had no clue what he was doing. So, in other words, when he was signing all the agreements, the margin agreement, the option agreements that Robinhood and every other broker has to have their clients sign before they're approved for these kinds of accounts, right? He said he had experience. He probably said he had plenty of money. You have to have a certain amount of money, certain amount of experience. But it's really up to the broker to make sure that that is true. And a lot of these new brokers sometimes, they don't do the due diligence necessary for such an account. When I first started working for a broker dealer, it was a broker dealer called Donaldson Lufkin Jenrette, DLJ, and they were one of the most conservative firms on the street. And when we approved customers for margin accounts and options levels, there's all different levels of options trading, right? Covered calls being the least risky of them all the way up to naked puts and naked calls. You have to have different levels of approvals for those kinds of accounts. Um, DLJ was one of the most conservative ones. You really had to, we did a lot of due diligence and made sure that the customers, in fact, knew their stuff before they got approved for any of this. I'll continue reading. In fact, a screenshot from Kearns' mobile phone reveals that while his account had a negative $730,165 cash balance displayed in red, it may not have represented uncollateralized indebtedness at all, but rather his temporary balance until the stocks underlying his assigned options actually settled into his account. So what is this saying here? When do options expire? They expire on a Friday, right? And apparently, and Robinhood did not reveal what kind of option strategy this guy was engaged in, and nor did they give details on the customer's account other than the amount that was showing due. So options expire on a Friday. And what so many, not just Robinhood, and I don't know if many brokers do this anymore because of stories like this, but what they do is when they expire, um, and you have a temporary debit, right, from your option strategy in your account. Now, apparently, it's people are thinking that this guy was engaged in a bull call spread, which I'll go over in a minute. But what happens is there's a, a temporary debit put in your account because he probably had a short put, which means um, he was going to get put this stock, right? And But before that, before the actual shares would be put in his account, which would happen apparently on the following Monday, they put the debit in his account. So this kid looks into his account, sees a $730,000 balance, panics because he doesn't know what he's doing. He doesn't know how his broker handles these accounts. The kid panics and he deletes himself. I'll continue. Silicon Valley based Robinhood is not sharing details of Kearns' account, citing privacy concerns. Quote, all of us at Robinhood are deeply saddened to hear this terrible news, and we reached out to share our condolences with the family over the weekend. End quote. It's impossible to know all the facts contributing to his deletion, especially in young people. Still, the tragic demise of Alexander Kearns is a cautionary tale of the serious risk associated with the race to the bottom in the brokerage business. Robinhood, E-Trade, TD Ameritrade, Schwab, Interactive Brokers, Fidelity, and even Merrill Lynch have all embraced commission-free trading and zero minimum balances in an effort to attract young customers, many of whom have little understanding of the securities and markets they are dabbling in. Yeah, so um, so I was working in 2019 for one of these brokers listed here, and when Schwab and TD Ameritrade went to zero commissions, my firm followed suit, and because of that, they had to cut heads because they were losing a lot of money. You know, when you're not charging people commissions for stock and stock trades and ETFs, right? So they had to cut heads, and a lot of people got laid off, and I was one of them. Let me continue this story. So then there's a quote. I thought everything was going fine, end quote, says Bill Brewster, Kearns' cousin-in-law and a research analyst at Chicago-based Sillamar Capital Group. His father said he was loving the markets and really enjoying investing. There's that word investing again. This is not investing what this guy was doing. He was speculating. Please get it in your head, the difference between investing and speculating. Brewster told Forbes, and then on Friday night we got this call from his mom, and he had ended. Kearns apparently fell into despair late Thursday night after looking at his Robinhood account, which appeared to have $16,000 in it, but also showed a cash balance of negative $730,000. In his final note seen by Forbes, Kearns insisted that he never authorized margin trading and was shocked to find his small account could rack up such an apparent loss. So maybe that's possible when you at the time, maybe you when you open up an account at Robinhood, they automatically give you margin trading. I don't know. But quote, when he saw that $730,000 number as a negative, he thought that he had blown up his entire future, says Brewster. I mean, this is a kid that when he was younger was so conscious about savings. Although Robinhood won't release the details of his account, it's possible that Kearns was trading what's known as a bull. I'm sorry, it wasn't a bull call spread, it was a bull put spread. Put options give the buyers the right to sell the stock at a strike price any time until expiration, while put sellers are on the hook to buy the underlying stock at the strike price if assigned. So this happens automatically at expiration if the price of the underlying stock closes that day at a price 1 penny or more below the strike price. Okay? So his short puts, apparently, strike price was greater than the price of the stock, so he got assigned. In Kearns' note, he says that the puts he bought and sold should have canceled out because normally a bull put spread involves selling put options at a higher strike price and buying puts at a lower strike price, both with the same expiration. The trade generates a net credit, which the option trader keeps if the stock price stays above the higher strike price through expiration. So anyway, and they go through an example of Amazon, and they show a price here of 2006.15 per share, which of course this is before the 20-for-1 stock split in 2022. Okay, so So what I hope you get from this is you're never going to be an expert trader. No one is. But you better damn well be an expert on what you're doing. If you're engaging in any kind of speculating or even investing, which, like I'll repeat, there are two different things, vastly different things. If you're engaging in any kind of trading, you better know damn well what you're getting into. You better be an expert on whatever option strategy you're engaged in. You better know your maximum gain, your maximum loss, your break even, how your broker handles the trade, not only while you're in the trade, but absolutely when options expire. How does your broker handle that? What is it going to look like in your account? Is there going to be a temporary debit of over $700,000 in your account only to be corrected the following Monday after expiration? This is not a game, all right? And I'm telling you, you young people, you're young, you're naive, you're impressionable, and there are tens of thousands of people out there on social media and YouTube or everywhere else that are looking to take advantage of your naivete and your inexperience, your ignorance of the markets, and the fact that you're impressionable. They make videos that show how much money they're making, and even the ones who are legitimately making that money, I've found that, and there are a number of traders out there I know who've been trading a while. They're very successful. They're young guys, um, but they don't mention a lot of the times in their videos what size accounts they're trading with. One guy I know is he's worked himself up to $1 million account. He's trading with $1 million. So the risk that he's taken on any one trade is very small compared to the balance in his account, right? So since his balance is so high, he can take a large trade and make a lot of money. He can make $20,000 on a trade, and he'll make videos. I made $20,000 today. And that's very alluring to young people who don't know what the hell this guy's doing, and that this guy is not taking a big risk compared to his account size. All right? These and a lot of the scammers out there make videos showing how easy it is to make money trading, and they offer you expensive courses that they could teach you how to do what they're doing. When you're first starting out, please don't buy any course or pay for Discord access until you know what the hell you're doing. When you get a few years of screen time and you know how this all works, you know what you're doing, and you have the screen time and the experience, you'll know how to spot the scam artists. But in the beginning, when you don't know anything, um, you see all these guys making videos of how much money they're making. You can't spot the scam artists. But trust me, if you're trading for a little while and trading very small amounts, you'll understand that trading is not easy. That being a successful trader, well, I should say trading is easy, but being a successful trader is not. All right? You'll be able, if you treat this as a business, you take this seriously, that you learn from guys who are being honest. You'll learn who the scam artists are out there. Anyone who has a thumbnail, a YouTube thumbnail out there that says this works every time. No, it doesn't. There is no trade that works every time. I have a secret to the market. There is no secret to the market. And that's one of the biggest things that young, naive people fall for is they think that the market, there's some secret to riches, quick riches. That there's a guy out there, a couple of guys who have the secret to the market. Well, I'll tell you, I remember Louis Rookheiser, who said, just when you think you found the key to the market, some SOB comes along and changes the damn locks. There is no secret. There is no key to the market where you can just step in 15 minutes of the market open every day, you make $1,000 and shut down your computer and go to the beach, right? That seems to be the American wet dream. Make easy money and spend the day at the beach, right? But successful traders are not spending days at the beach. What are they doing? They're working their asses off. They're studying the charts. They're reviewing their trades. They're journaling their trades. On the weekends, they're opening up their account. They're looking over the trades they took the last week. They're reading books. They're watching videos of people who are not scam artists, who are honest and tell you how difficult this is. So you really have to know what the hell you're doing and how your broker handles your account. I don't want you to end up like this young 20-year-old who panicked unnecessarily simply because he didn't know what he was doing and he didn't know how his broker was handling his account. You have to be very careful. So that's all I have to say for this video. It's a sad ending for that kid and his family. I remember when this story came out. It was a horrible story. And it's not the only one. This is not a standalone story. There were a lot of other stories like this out there, and worse than this. There was a story years ago where a guy who was working at I guess it was some kind of prop firm, day trading, and he came in one day and deleted a few people. That was a horrible story too. You have to really be careful, and you're never going to see on this channel how easy this is. You're never going to see on this channel, oh, just put all your money into a day trading account. I'd never make a video like that. So please be skeptical of everyone who makes a video out there. Get some screen time if you're doing this. Watch my other videos. Don't put a ton of your money into this. Paper trade for a while just to get a feel of your broker's platform and how things work, and don't engage in anything that you're not an expert on. Like I said, you're not going to be an expert trader, but you better damn well be an expert on whatever you're trading, whatever strategy you're trading, whatever instrument you're trading, and you better damn well be an expert on how your broker handles your account. Finish reading the rest of this. So Kearns may not have realized that his negative cash balance displaying on his Robinhood home screen was only temporary and would be corrected once the underlying stock was credited to his account. Indeed, it's not uncommon for cash and buying power to display negative after the first half of the options are processed, but before the second options are exercised, even if the portfolio remains positive. Tragically, I don't even think he made that big a mistake. This is an interface issue. They have slick interfaces, confetti popping everywhere. Oh, God. Says Brewster, referring to the shower of colorful confetti Robinhood routinely deploys after customers make trades. They try to gamify trading and couch it as an investment. Uh, this is not fun and games, people. Shower of colorful confetti Robinhood routinely deploys after anybody still trading with Robinhood. I mean, nothing against them, I guess, but are they still doing this? You place a trade and they shower your account with confetti. This isn't a game. This isn't. This is. You got to take this seriously. Okay, so I'm gonna end the this video here. Um, Obviously, once again, I had to just cross out uh, the meat of this headline and this Forbes story from 5 years ago. Um, and Actually, it was published 5 years ago yesterday. Wow. Um, so, anyway, I hope you got a lot out of this. This is definitely one of uh, the saddest but most important video I'll probably ever do. Um, Please watch what you're doing out there. Um, and That's all I could say. I say you got to treat this very seriously. This is not a game. All right. Hit a like button, subscribe to the channel, and I'll uh, I'll link to my video that I did on understanding margin the way your broker does. Okay, it's a companion story to a companion video to this video. All right. I'll see you in the next video.